Now, it's been a big year for IPOs. Not every company that has come into the public market has been well received by investors, but Tradeweb has. Shares climbing almost 60% since its IPO last month. Joining us now with more is Ed Hammond, Bloomberg's senior deals reporter, and Lee Olesky, Tradeweb's CEO. Lee, Ed, great to have you both with us. Clearly a remarkable year for IPOs. Not every company, as we mentioned, though, has been doing as well as you have. Now that you have some time to look back on what's happened, walk us through the process. How painful was it? How unexpectedly easy was it?
Well, for us, all in, the process was actually pretty smooth. We had a number of advantages going into our IPO process. Certainly our team worked really hard. It was a lengthy process. We put a lot into it.
And it was actually longer than usual, right? Or
well,
what you expected?
It was a bit longer than usual because we had the government shutdown that delayed us about a quarter. But aside from that, we had an advantage in that our investors were big institutions that were very familiar with the process. So we had Blackstone, we had Goldman Sachs, JP Morgan, Morgan Stanley, Citibank. They all helped us through the process, either as underwriters or advisors.
I'm just looking at the way you guys have traded since going public. It's this sort of lovely line that you want to see, which it goes up at the beginning and then it sort of gradually ticks higher. Look at Uber, look at Lyft, look at Luckin Coffee. All have been sort of extremely volatile. So what is it about those IPOs where the story wasn't right, or where the investment community didn't seem to understand actually what they were buying on day one?
Well, I think I'll speak to Tradeweb, when we went through the process, we were sure to make sure that our investment thesis was very clear to the investors that we were talking to. And I think investors are always looking for a growth story, a value proposition, and profitability. That's something that Tradeweb has had for many years. We've been in the markets for almost 20 years now, which is a little bit different from some of these other companies.
Did you find that that length of time as being a private company, that 20 years, did that work to your advantage or did it work against you to some degree?
Well, I think it worked to our advantage in large part because as an organization, we were very well prepared for this. We had institutional investors for many, many years. We were used to the process. It takes a lot of effort and work to be prepared for being a public company, and we were ready.
Why now? What was the sort of motivation to go public now? Because 20 years, you would think, is long enough to say, well, we like being private.
Yeah. Well, I think for us, we had gotten to a point where our growth as a business had become such a size that we really needed to move into a public market environment. We also wanted to accomplish a couple of other things. We wanted to streamline our governance. As a fintech company, it was very important for us to have an equity component, both as a retention tool for employees and as a tool to attract employees. And finally, we were really focused on the growth strategy. What would best position Tradeweb for the future growth in the market?
So, from where you stand, what do you think happened with companies like Uber and Lyft? Where did they perhaps go wrong? Is it because of the pricing or is it because of the lack of profitability?
Well, it's hard for me to comment on that. What I would say is that the process that we went through on pricing, and we ultimately upsized our deal. I think we were the largest upsized percentage in almost the last 20 years. There's a bit of art in the process. It's not a science.
Explain that.
Well, both pricing and sizing the deal are critical components. And I think with Tradeweb, we became more informed as we went through our roadshow and met with investors and had great advice from our advisors and ultimately came out with a good result.
So when you were out there on the roadshow, though, given the environment that we were in, I mean, we were coming off the government shutdown, the markets were kind of wobbling a little bit here and there. Do you think that it was harder to make the sell in that environment as opposed to maybe if you had gone public, I don't know, say 5 years earlier?
Yeah, it's hard to assess that, really.
Yeah.
I think our experience and where we sit today, a couple of months after the process, suggests that that was a good timing for us, and it worked out incredibly well for us. I think we were ready for it at the moment in time, and we did get a little bit lucky with timing. I think that timing, you need a little bit of luck in these processes.
Lee, we're in an industry right now, particularly an industry you serve, fintech and more generally financial services, where for the first time really since the financial crisis we're seeing consolidation, real consolidation. Just yesterday, Global Payments, Total Systems, we've seen a lot of others this year. You serve these companies. What are you seeing? What's driving this trend and how likely is it to continue?
Well, fundamentally, Tradeweb is in a business that is a network business where we're applying technology, we're writing software and distributing across a very wide network. As a result of that business model, which there are a lot of other businesses that fit that model, you have a tremendous opportunity to leverage up your business in terms of scale. And I think You know, as you have these technology businesses where there's a huge network, combining businesses make a lot of sense because of the scale opportunity that you have in deploying your software and your technology to a broader network.
Should we expect Tradeweb to do some M&A in the near term?
We're always going to be incredibly disciplined about how we approach this, just as we've been for the last 20 years. But of course, we're going to have our eyes open.
So, given the environment that we're in, the political environment, with all the trade rhetoric hardening on both sides, do you think that's going to have any kind of damping impact on or effect on M&A, on willingness to do cross-border transactions?
It's certainly an added complexity. I think there's a variety of issues that you have to confront on any of these cross-border types of deals. And regulation and the political environment is going to impact things.
All right, Lee, thanks for joining us. This is Lee Olesky. He's the Tradeweb CEO, and of course, Bloomberg's Ed Hammond. Thank you both.